Very good afternoon. You're watching Your Stocks in the Mumbai News Studio. I'm Ekta Batra, and with me today is Vinny Motiwala. Well, it's turning out to be a session which is seeing some amount of positive uptake at this point in time. So we've managed to see some amount of traction on the upside. 25,404 is currently where the Nifty is at, and we have the mid-cap index, which is up around 0.4%. It's a lively market now, so I'm sure we have a lot of queries considering that the markets are at record highs. Hi, Vinny.
Hi, and good afternoon to you as well, Ekta. So finally, at least some recovery that we're seeing coming in the markets, and that's going to be interesting to watch out for because mid-cap, that's also performing well. Yeah. Today, the Nifty mid-cap has seen a good run-up and picked up pace since the get-go. So keeping an eye out on that. Nifty mid-cap up almost 0.4% and trade near the day's highest point. But I think we'll get started with all the queries right now as well.
Yes, absolutely. In fact, joining us this afternoon, we have Astha Jain, who's here with us from HEM Securities on the fundamentals. Ruchit Jain, who's joining in from 5paisa.com to talk about all of the technicals that we have. Afternoon, Ruchit as well as Astha. Well, before we kick off the show and the queries, Ruchit, just wanted your thoughts in terms of the technicals. We've seen a little bit of an uptake and recovery which has taken place. Would you buy into this?
Yeah, hi, very good afternoon. Well, the broader trend still remains positive. There is no doubt about that. The kind of upmove that we witnessed during last week, this upmove has been supported by a broad market participation. The only near-term hurdle is around 25,500 level, which is the retracement of the previous correction. And I think once the index manages to surpass that, then we could see this up move continuing towards 25,700 to 800 zone in the near term. So yes, the outlook remains positive. So any kind of intraday dips that we are witnessing are getting bought into. So certainly one can look for buying opportunities even at current levels or on any kind of dip towards 25,350 to 300 range. So the stop losses would become the risk reward ratio would become favorable over there, and one can expect levels of 25,500 followed by 25,700.
Okay, all right. Well, let's get in our first query then. We have Prashant, who's on the line from Hyderabad with an investment question. He wants to invest in Tata Motors and NMDC. And Prashant, welcome to the show. Tell us.
Thank you. I'm actually looking to invest 1 lakh each into NMDC and Tata Motors. Basing on the charts, I thought they have corrected quite a bit. So is it a good time or should I still wait for more correction?
Okay. What's your investment horizon? How long can you hold on to these investments for?
6 months to 1 year.
Okay. All right. 6 months to 1 year. Let's get a fundamental as well as a technical view. Ruchit, let's head over to you for a technical call on NMDC as well as Tata Motors first.
Yeah, so I'll start with Tata Motors. In last few trading sessions, we have seen a decent price-wise correction from its high of 1180. And the stock has good support around 950 mark. So I think the price-wise downside seems to be very limited from here. There could be some time-wise correction once this price-wise correction is over. But if you're looking from 6 to 9 months perspective, then these are good prices to go long on Tata Motors. So I think, yes, you can use this dip as a buying opportunity over here. And NMDC also, if you see within the metals name, major support for the stock is around 200 to 190 range. So here I would advise a buy on dip approach. In case if you get that price of around 200 kind of range, 200 to 195, I think that would be a good price to create fresh longs in NMDC as well.
I'll come to you on the fundamentals. How is Tata Motors looking as well as NMDC? Recently, we did have, that note that came in from UBS as well on Tata Motors. We saw a bit of a decline. So what is your word on the fundamental side for both these stocks?
Hi, good afternoon to all of you. So talking about Tata Motors first, on the fundamental side, we are really excited by the new product launches from this counter. Although we have seen due to downgrades, sharp correction was there in the stock prices, but I think that is a real good opportunity to take entry into the counter. So we are expecting this counter to move back again because we believe that the company is well placed to cater the future opportunities present in the automobile sector. So we are positive on the Tata Motors in the longer term. Maybe in the shorter term, some dip can be expected. So that will be a better opportunity to buy. We are recommending buy on this counter with a price target of 1150 to 1200 at the initial levels. Now, talking about the NMDC, what we have seen that rise in the steel prices was really helping the company in showing the strong surge in the volume. So the company is really showing its performance on the basis of the movement in the commodity prices. But now we need to see how these prices will going ahead affect the company's financial performance. So for NMDC, we are expecting some more dip to come. So we are recommending not to buy at the current level, let some more dip come, and in fact one can wait for the upcoming Q2 results also. After that, one can make an entry into the counter, although we are expecting this counter to move again on the northward trajectory with a price target of 250, but making entry at this point is not advisable. Maybe some dips can be expected around the 200 level, and then one can make the entry.
Okay. Thanks so much for that, Astha. Prashant, I hope you got your answer over there, both on Tata Motors as well as NMDC.
Yes. Thank you. Thanks a lot.
Okay. Thanks so much for calling us, Prashant. But let's move on. And Shashank is writing to us from New Delhi. And this one is on Zomato. Now, Zomato obviously has seen a amazing up move in the last 1 year as well. Last 6 months, there's no stopping that. Shashank is holding 1,500 shares of Zomato at a price of 183 rupees per share. He wants to know whether he should continue to hold this or sell. Ruchit, what's your view on this one?
So there's no doubt that overall trend still remains quite strong. Any kind of intermediate declines that we are witnessing since last 2 or 3 quarters are getting bought into. And the important support for the stock is that recent higher bottom has now shifted to 240, which is much more above his buying price. So I would recommend to continue to hold on to the stock. We could see some further up moves going ahead. Any corrections, I think look out for support of 240. Only if that is breached, then you need to worry or you need to reassess to whether you should exit over there. But otherwise, continue to ride this trend.
Okay, all right. That's on the technicals. What about you? Astha, we've discussed Zomato ad nauseum on the show because everybody always has a query on Zomato. But nonetheless, what's your fundamental view on this particular stock?
So we are positive with this Paytm's acquisition of, the movie ticketing business, and we are positive on this counter. We expect this counter to move ahead in the northward trajectory because we believe that the stock can show the price targets of around 300 and 315 odd levels. Now, talking about the fundamentals, because of the acquisition of this business, the company will be showing strong performance, maybe 2 quarters ahead in their margin we can see. And their going out business, I think, will definitely help the company in posting strong numbers because now company has plans to launch the app by the name of District. So I think all these efforts taken by the company will really help in showing strong financial performance. We are positive on the counter, recommending the price target of around 300 to 315 at the initial levels.
Okay, all right. So that's on Zomato. As you can see, that stock has just gone through the roof, 165% just in the past 12 months odd. But now let's get in another question. We have Manohar, who writes to us from Mumbai. He holds 600 shares of BHEL, which he's bought at an average cost of around 212.5. So he's a long-term investor, wants to know what to do, whether he can hold these shares for 2 to 3 years. He's currently sitting on a profit of around 34,000 odd. He's doing well on this particular counter. Astha, give us a sense in terms of what your call would be on this.
So we are really excited about the strong order book this company is having, and they are getting new orders. So we are believing that going ahead also the financial performance will continue to remain strong. And on that basis, we are positive on this counter. We are recommending hold on this counter as well as buying on dip strategy can also be applied. Initial price target can be set at around 305 odd levels.
Oh.
Right. Okay, keeping an eye out on those levels over there for BHEL. But let's move on to the next query. And this one is coming in on Vedanta. Today we've seen all these metal names also buzzing in trade. Now, Uday Kumar is writing to us from Bangalore. He's holding 1,800 shares of Vedanta at a price of 473 rupees per share. He wants to know whether to hold or sell Vedanta. As of now, today, the stock is a bit subdued. At the current levels, what's your view on this one, Astha?
So we are positive on the Vedanta. We are positive because we are expecting the company to show the $10 billion in the EBITDA, and their upcoming capacities will really help the company in posting strong numbers. In fact, company has a plan and they are going on the trajectory of deleveraging themselves. So definitely a positive point from the financial front, and their cash flows will help the company in expanding capacity. and future expansions because they have a strong cash flow. So we are positive on this counter, looking after all these points, recommending a hold. Initial price target which we are giving to this counter is a small, which is 505. So not much upside from here, but definitely we would like to see the results, and then we can also upgrade our price target. But for now, it's 505 price target which we are giving to this counter.
Okay, all right. And Ruchit, what about you, Vedanta?
So in last 3 months, the prices have oscillated within a broad range of 475 to 400 on the lower side. So this just seems to be a time-wise correction within a broader uptrend, because in this entire consolidation phase, the 100-day support has not been breached. So technically, it seems that the short-term trend for the stock is sideways, but the mid to long-term trend uptrend remains intact, because in this consolidation, we have not seen any kind of volume-based selling or supports getting breached. So if you can keep a patience of about 7 to 8 months or 9 months, so I think this is a good stock to be in. Continue holding this stock.
Okay, all right. So that's the call coming in on Vedanta. We have Ramchandran Ravi, who writes to us from Chennai. He holds 50 shares of Cyient, which he's bought at around 950. He's sitting on a fabulous profit there. And he's a long-term investor, wants to know what to do, whether he should hold on or sell this particular counter. Well, the current price is over 2,000 odd rupees, and the buy price was 950. It's a cool 60,000 rupees profit that one is sitting on this one. What would your recommendation be, Ruchit?
So he has a good margin of safety. Recently also, when the stock price corrected along with the broader correction in the IT names, we did not see the stock going below 1600 mark. So I think the support base has been shifted to 1600 for mid to long term, and that too is quite above above the buy price. So I think there is a good margin of safety since the broader corrective phase has been done. The price-wise corrective phase has been done. I think the stock should gradually recover and move higher towards 2400, 2450 kind of range. So my advice would be to continue to hold the stock. Can review again once the stock comes around 2400 to 2450.
Okay, and what about you, Astha? Cyient?
We are recommending hold with a price target of 2360 to 2370 at the initial levels. So talking about this counter, the TCV is really very strong at $182.5 million. So I think that is good, and they are showing strong recovery on the back of good deal wins. So in the future, we are positive on this counter. The only caveat is that how the other economies, especially US and European economies, behave, that we really need to see. But meanwhile, one can hold the counter for the price target of 2360.
23,360 is the target price, so keeping an eye out on that one. But on that note, let's take a quick break and we'll answer more of your stock-related queries on the other side. Stay tuned. Welcome back to Your Stock. Still with us, we have our experts for today, Astha as well as Ruchit, who will be answering all your stock queries. But let's move on to the next one. And Ramesh Rajgopalan is writing to us, and he's from New Delhi. He's holding 50 shares of Garware Technical Fibres. He's purchased them at a price of 100 rupees per share. So clearly, he's bought it a while ago, because right now the shares are trading at 3,951 rupees per share. He wants to know what should he be doing with this. Ruchit, first your view, and then we'll come to you as well, Astha. Should the viewer continue to hold this? Clearly, bought this, I believe, in the 90s sometime?
Yes, maybe quite a long time ago, and the kind of profit that is sitting and the kind of the buy price that he has, I think he did not worry much about this stock for mid to long term, even from current levels. The overall trend looks quite positive, even if I look at the recent last 3-4 years of data. So the support base for the stock for short to medium term has now shifted to 3,500, and I think the stock has potential to rally high towards 4,600, 4,500 kind of range going ahead. So still the broader trend continues to remain positive. So I think you can continue to hold on to this stock.
Okay, all right. And what about you, Astha? Have you looked at the fundamentals of this particular stock?
Yes, and fundamental seems to be very strong because they have posted strong numbers in Q1 FY25. The company being into the technical space, their bottom line was up by 8%. What is positive about this counter is their debt to equity ratio, because debt is really low, and their debt to equity ratio is on the lower side. So we are positive on this counter because their margins are also very strong with a 19% operating profit margin. And in fact, valuation wise also, they are not highly priced. although they are exceeding the industry PE multiple of 30, they are standing at 33 PE multiple, but still we believe there is a scope of more upside in the counter. So recommending a hold with a price target of around 5,000 something odd levels.
Okay, all right. The price target of over 5,000 odd rupees is what you're recommending.
I beg your pardon, it's not over 5,000, it is over 4,000. So apologies.
4,000.
5,000 of over 4. Yes, price target of over 4,000 rupees. Yes.
Okay, all right. Okay, so not too far from those levels at this point. But anyway, let's get in another query now. We have Dheeraj, who writes to us from Hyderabad. He holds 30 shares of Phoenix Mills, which he's bought at around 3,352, sitting on a profit on this one as well. And he's asking what to do with this counter. He wants to know what to do, whether to hold or buy more shares of this. What's your recommendation, Astha? First, on the, on a counter such as this, it's within the real estate space. It has commercial real estate as well. What is your sense in terms of incremental upside?
So their Q1 performance was good because there was an increase in the rental income. And what we have seen that the more footfalls in the mall. So that is really helping the company in posting strong performance. Their ARR have improved significantly. And in fact, occupancies have also improved significantly. So I think this counter is looking positive to us. Going ahead also, we believe that it will continue to perform strongly. We are recommending hold on this counter. Initial price target can be set at around 3,900 to 3,950 odd levels.
Okay, keep an eye on those levels there. But Ruchit, what's your view also on Phoenix Mills? Is that something exciting? And given that the viewer at the purchase price versus the purchase price, the viewer has seen an increase, would you suggest that they continue to hold, buy, or sell? What's your view here?
So I would recommend to hold, but I would also recommend to keep a strict stop loss below rupees 3,200, because if I am looking at the monthly chart setups, then they are quite overbought. Momentum readings are there because in last few months itself, the stock has seen a significant run up. So I think whenever we see such overbought setups, the stock either goes through some kind of price-wise correction or a time-wise corrective phase. Now, the recent correction, we have not seen any kind of volume-based sell-off, and hence the chances of time-wise correction is high. So that chance remains intact till it is about 3,200. So 3,200 remains a crucial support for the stock. If that is broken, then book the losses and exit from that. So we can hold on for now for a pullback move towards 3,800, but with a strict stop loss below 3,200.
Okay, all right. Well, let's get in another query now. We have George, who writes to us from Chennai. He holds 800 shares of Morepen Labs, which he's purchased at an average price of around 29 odd rupees. Just look at the kind of profits people are making within the mid caps. That's really the power of compounding which stands out. He wants to know what to do, whether to hold or sell or add more at these current rates. Well, the stock is is close to the best levels that it's seen in the past 1 year odd. It's rallied significantly as well. From that perspective, Ruchit, do you think that it's time to probably take some profits off the table? As you can see, it's up around 60% plus in just 3 months.
Yes, I think no question of adding more over here, but I would suggest to book partial profits at least. And within the pharma name, if you want to stay invested, then that partial, the amount which you get from that partial profit can be shifted to large cap pharma names such as Sun Pharma, where I think the stability would be there even in case of some volatility in the market. So my recommendation would be to book partial profits over here in Morepen Labs and shift to Sun Pharma from the large cap space.
Okay, shift to Sun Pharma from the large cap space, from the profits you actually book in terms from Morepen Labs. That's the word coming in from Ruchit. But Astha, do you also have a similar view for this one? And, maybe large cap is something that you would look at in the pharma side.
So the reason behind such a strong movement in the stock prices is, I think, the financial performance, because more than 90% jump, if I remember it correctly, they have posted in the bottom line. So strong financial performance, their balance sheet is not at all leveraged. And the most important point is that as they are a category leader in the 6 APIs, and they are into the medical devices also, like glucometers, blood pressure monitors. So all these segments are really working very strongly for the company, and they are exporting to 80 countries. So I think going ahead also, the market of all these medical devices is really expanding day by day and posing a company a very strong opportunity to cater. So I think the company will going to perform strongly in the future also. My idea here is to stay invested. Initial price target can be kept at around 100 215 odd levels.
Okay, 100 to 115 levels. You're saying continue to hold this one. That's on Morepen Labs. Keep an eye out on this one. Today a bit subdued in trade. Let's move on, and we have Ashok Khanna who's writing to us from New Delhi. He's holding 1,000 shares of Linde India at a price of 592 rupees per share. Clearly, this is one of those other names as well, Ekta, again, where we're seeing a lot of compounding coming in and coming into play, because 8,000 rupees, 8,200 is what it's trading at right now. Now, he wants to know whether you should continue to hold this for further 3 to 5 years or maybe look to sell. Astha, what's the word on this one?
So I think partial profit booking we are recommending on this counter just because of the valuation. Now, if we talk about the valuation, price to earning multiple is really surging high, much ahead of the industry multiple. So on that basis only, we are recommending to book partial profit and remain holding the partial stock with a price target of around 9,000 at the initial level, because the company has performed strongly. Around 16% growth they have posted in the bottom line for Q1 FY25. So positive on this counter, but just due to the valuation concerns, recommending to book partial profit.
Okay, valuation concerns, so book partial profits. That's the word coming in for Linde India. But that was the last query for today. So thank you so much, Astha, as well as Ruchit, for joining in with us on the show and solving all our viewers' stock-related queries. And do remember that you can always email us the queries, and we will address them with our experts every day, as well as stay tuned in for Closing Bell to take you through the last hour of trade. Goodbye from Ekta, myself, as well as the team who put this show together.